Hey, what's up guys? So today I'm gonna do a breakdown on the price action on NASDAQ yesterday. That was Monday the 3rd. And I think I'm gonna start to do, I wouldn't say daily breakdowns, but most days I want to do some breakdowns on the price action, either NASDAQ, Euro, USD, gold, maybe some other things. So if you guys are finding my videos insightful and educational, then please keep a lookout. So we're on NASDAQ on the higher time frame. We want to look at what happened during New York session, but we obviously want to do a higher time frame analysis. So yeah, if you watch my last video, we mentioned that this zone here being on the weekly time frame, an opening price gap, which we have closed somewhat, but we can consider this zone as a potential zone that price can find resistance at, right? So like an institutional level of resistance, a higher time frame zone, right? Okay, what we can also see on this weekly time frame is that clearly we are bullish, because here on the weekly time frame we have made a weekly higher high, and we also, so we closed above this high, we also closed above this being the previous week. Okay, so on the daily time frame, so this year also break of structure to the upside on the daily. So weekly break of structure over here and a daily break of structure. What else I want to mark out here on the daily time frame is Friday's low and Friday's high. Okay, why do I need to mark these out? Well, this is the extreme points of Friday, so it's the sell side liquidity and the buy side liquidity of the previous day. On the 4-hour time frame, so here on the 4-hour, here we have Friday's low. We can see here on the 4-hour we've had a 4-hour break of structure. So 4-hour has made a higher high, and I want to actually just cut that candle off there. So once we have this break of structure, we know all other time frames, all other higher time frames being weekly and daily, is bullish. Here 4-hour is bullish. We've had a continuation higher high. Once we make this higher high from the low of this candle, so of the last bullish candle, there is 4-hour fair value. So it's a 4-hour fair value gap there, like this. But here you see we come into it, so this fair value gap gets smaller, like that. But this is our, this is, you could say, the first bullish higher time frame zone below price. Going on the 1-hour, so on the 1-hour you can see this is a 4-hour fair value gap. On the 1-hour, it's a fair value gap there coming down here, and then we have this here, and this is like, it's called a hidden base, or some people call it a hidden base. So there's no bearish candle here, but you can see as the candle comes up, it has a top wick, and then the next candle opens and has a bottom wick. So it's showing that there is a high and then a higher low, and market continues up. So this can be a refinement or a segment of that 4-hour POI, right? Initially obviously coming from this 1-hour fair value, so from here all the way to the bottom of this candle, but here we tested a bit deeper in it. So this is the remainder of that zone. From a bearish perspective, what we have is so this is a gap at market open on Monday. So let's mark that out as a gap at market open. So the gap being from the close, so we close bullish on Friday there, and then we gap down, and the opening of the candle is there. So you'll see when we opened, this candle does have a top wick, so we tested a little bit into the gap, but we haven't closed it. But I'll mark it out as the entire gap, and not just necessarily looking for price to close the gap, because we can just come into the gap or where the original gap was, and this can still be treated as a type of a area where price can find resistance, right? So looking at it from this perspective, what have I done, right? So we obviously did a higher time frame analysis, but here pre-market, before market opens, what I want to find are higher time frame premium zones and higher time frame discounted zones. And what I want to look at is whichever zone price comes into first. If there is added lower time frame confluences, there is a higher probability that that setup will play out, right? So like with trading NASDAQ at market open, it's very sensitive to price. So even if the move at market open is not the major move of the session, it can still be a high probability move, and it can be a very quick move where you don't have to spend a lot of time trading for, you know, hours or whatever. You can just catch the initial opening move if there's confluences for it. Sometimes the initial move is the whole move, then it's great. But obviously now, with price being where it is, being obviously bullish, but at a real premium within a higher time frame premium zone, this opening gap above price, it's tricky to, you know, look for extension buys, for price to go higher and higher and higher, because price can be somewhat exhausted here, and there can be an eventual medium term reversal. So we can just sort of look at playing price at the open. Okay, so there we have the zone, right? So let's go to the 15 minute and let's just check the time. And we also want to mark out certain other things, right? So you're on the 15 minute. Other things that I want to take note of. Okay, let's go a bit forward. We need to go a bit forward. Okay. More. Okay, so now we've mitigated deeper into this, which was the 4 hour 4 hour zone, right? So now we've tested. Okay, no, let's just leave it like that. So here we've tested deeper into that zone, into that 4 hour fair value gap. Other things we want to mark out is all of this liquidity, these highs. So that one, this one, and this one. So you see here, it's a high, lower high, lower high. So here we have trend line liquidity, right? So if you're potentially looking for price to react positively, because now where are we? We're at a discount when we're looking at the daily price action, right? So even though on higher time frame, price is definitely at a premium if we're looking at it from a weekly or a daily perspective. But here, for intraday structure, price is at a discount because market opened here and we gapped down, and for the day we've basically just continued a bit lower and lower and lower. So here when we are here, price is somewhat discounted, and it's also within this 4-hour fair value gap, which is a higher time frame discount zone. So if on lower time frame we can get a decent indication of a market structure shift, there could potentially be opportunity to buy. And with these highs, you would have an expectation of at least one or two of these highs to be taken out. If not one or two, all of these highs to be taken out. But given how price is right now, price could reverse at either one of these highs. Okay, so look, on the 15-minute, we don't necessarily have a real strong indication of a market structure shift, because here we have this low, so the market makes a lower low. A break of this high would indicate a real change of character on the 15-minute. So let's go on the 5-minute. So here on the 5-minute, we do see somewhat of a change of character or market structure shift, because we have this low here. So it's a break of structure to the downside, and then we have this high which is broken here, which is a change of character to the upside. So bullish shift in market structure occurs here on the 5-minute time frame, and this is after we react off the zone being a 4-hour fair value gap. So let's just go another candle forward. Okay, so look, once this next candle forms, now fair value gap forms on the 5-minute. So from year to year is somewhat of a POI that you can potentially trade from, and this is more or less what I took. I didn't take it immediately off here. I waited because we tested into here before the market opened, so I waited. But if this is the POI, this could have been your entry, right? Was your target potentially back into this gap, and you'd need to take it a bit more to make it a 2-to-1. So if you looked for a deeper stab into here, could have had a better risk reward. Now this is a 2-to-1. Is it good enough? Well, for me it's good enough. Because when I started trading, my mentor told me, a day that you don't trade and you don't lose money, you can consider that a winning day. And when you gain experience in trading, you start to understand that not losing money is almost like making money. So on a day that you get a 2-to-1, just be grateful for it. Because believe me, a lot of times if you make a 2-to-1 trade and you're not satisfied and you go look for more trades, you'll end up losing it, and you would have wished that you had just taken that 2-to-1. And you know, sometimes it's not necessarily about the risk reward, but it's about the probability. So like for me, even with this being only a 2-to-1, this is a very high probability setup, because it's materializing just before market open. So we're testing into a higher time frame discounted zone after price has traded to a discount through the day, right? And we've had a 5-minute market structure shift, and there is a decent POI to trade from, and there is confluence for us to go up, because we have all of this trend line liquidity that formed with all of these blue lines, with this opening price or this market open gap that occurred, which is a weekly opening gap. So price could be magnetized to the zone. So let's go a bit forward. Let's see, what is the time here? Okay, so we'll need to go a few more candles forward. Okay, so here price tests into the zone, right? But we test into the zone before market open. This is one candle before the New York Stock Exchange open, right? So that's why I didn't enter this, because I generally, if we test into a zone pre-market, I will wait, and if it's a bullish zone, I would wait for the pre-market low to be taken, right? So what I mean is here, so here we test into it, but now we make this pre-market low. So for me, we've tested deeper into the zone, so that 4-hour zone, or that zone on the 5 minute now becomes a bit smaller. Let me just see where this thing is. So now we can enter once we sweep the pre-market low, and we have our stop loss. And look, this is, yeah, if in this zone there was a prominent low, then you could have made the stop loss smaller. Like you could have, for example, like you see this wick here, you could have regarded this as a low, so you could have entered like this, but this is obviously a more aggressive entry. In this case, you would have had a much bigger risk reward. Let's just see if I did adjust this thing properly. I don't want, okay, it is right. So these are type of refinements that you can make, but obviously with this, it's a bit more risky because this entire zone is the point of interest. So I'm just going to show the conservative approach because I want to accommodate for all approaches, and I don't want to necessarily promote like, you know, more aggressive trading, because with smart money concepts, like I've noticed that a big appeal in it, or why people maybe become attracted to it, is because people who trade it, they generally show, you know, these ridiculous type of, not ridiculous, but like always, you know, very high risk reward, like 5 to 1, 10 to 1, 20 to 1. Like, of course, it's very possible to do that, but at the same time, like, you do take a lot of losses when you have an approach like that, because you're constantly always having a very tight stop loss. But because of that, if you are, for example, your average, when you take a win, it's like a 8 to 1, for example, then you can have many losses, because each loss is just basically a 1% loss, whereas each win is an 8% win. So it also takes a different type of trader to adopt that style. You need to be willing to take those losses and to be patient for the setups, and you also have to be very focused, because if you're looking for those type of setups, you need to be sitting on the 1 minute and, you know, really understanding the price action and knowing what is valid as these really low time frame confirmations. But this is the more conservative approach because we're taking this entire POI, right? So let's see what happens when we go forward. Okay, so market sweeps that. So we come into the POI. So for me, this is, I entered this yesterday when I traded. I entered it with a stop loss below this low, with a risk reward about 2.5, 2.6, which for me is cool. It's good enough. Okay, so now we're also going to look for if there are any type of confirmations that we can trade. Okay, so now the next candle immediately just engulfs that candle, which tests into this. So now we can consider order flow. Remember, we tested into 4-hour fair value gap pre-market, and then we had a 5-minute market structure shift within that 4-hour fair value gap. Then we traded back into that 5-minute POI on market open, right? And we've responded quite positively. So we've had a 1-minute market structure shift after testing into that. So now this is actually a very valid entry to take. And if you take an entry like this, your risk reward is definitely going to be much better, if that's what you're looking for. Like in this trade, your risk reward is almost a 4.5 to 1 versus this one, which is a 2.5 to 1. Why would I take this one? This is actually a good one. I would definitely. Though if I were to actually take it, I wouldn't necessarily put my stop loss right there. I would leave a little, maybe like 5 pips or something below it, just to allow the trade to just breathe a bit. But even with that, it's almost a 3.5 to 1, right? So, okay, we don't need to see that. Let's just see what happens. This one, we actually can just move up a bit. Okay, let's go forward a bit. Okay, so there we test into that 1 minute order block, right? And then we continue higher. So we break this first high, which remember was the trend line liquidity. And then let's see what happens. We continue even higher. We break this high as well, which was the next intraday high that we were looking at. And with these highs, if you did not catch a trade, you can potentially wait for one of these highs to be taken out and to be the catalyst for a pullback, so you can get an entry. So yeah, we need to wait for price to come lower, because if you didn't catch buys yet, you shouldn't be catching buys up here, because then you're buying at a premium. You want to look for a discounted zone. So with here being a break of structure to the upside, bullish, we can look at this zone. So we take a fib or something. Here the GAN box, we look for that midpoint being the 50%. So we want price to come to a discounted zone. So right below this, we have this candle here, which I would consider the order block. Why would I consider this the order block? Wouldn't this be the order block? Well, it is. But this order block here, we came down and then we broke up. So we broke this very small market structural point, right? Because we had a lower low here, and then we broke up. We broke the highs there. Whereas this high was not broken as a result of this order block. It was actually broken from this point. So market came up, so there was a small pullback into this order block, and then we continued up. So this could be a decent zone to look for buys from if we don't reach that target before. So let's see what the risk reward would be. But now, because we're looking for confirmations, we're trading from a higher price, so we're catching less pips, so risk reward might not be the best. Yeah, this would only be a 2 to 1, but like I said about 2 to 1s, if it's what the market gives, I'd advise you to take it. So let's go forward. Let's see if we get that. And now we can also, once we come into the zone, you can have the same approach of either entering like a risk entry or waiting for a confirmation within that zone. So like here, you see these wicks here. This is where the fair value begins, right? Here. But these zones are still kind of premium. So even if we get confirmation or something at a high end of this, it's not really high probability. Whereas getting a confirmation, because if you want to look for buys and you want to find confirmations, you should be finding those confirmations at discounted zones. So not necessarily in the fair value, but rather in the order block, in the low end of the impulsive move. That's when confirmations are high probability. So yeah, you'll see this you could have considered to be a bullish confirmation. So you could have looked to trade from here within the zone, because we broke these small internal highs here. But for me, because there's still this could just be a trap and could eventually take out that low right there. So I would rather wait for price to come into here, then either enter immediately. Okay, well now we just continue further up. Let's see what happens. So even for me from this point, if I did not catch this trade at the bottom, I would definitely not be looking to buy it, because what I'm just looking to buy from year to year. If we came into year, I still would not take it as a instant entry, because now we could potentially be having a reversal. But if we come into this one and we have a market structure shift, then I would potentially be looking for a buy. And why wouldn't I necessarily look at just an instant entry? Well, because we have now swept liquidity, buy side liquidity. And even though we were looking at this zone for market to come into above price, we could just reverse from one of these highs. So like for me, when I entered this yesterday, by the time I was at a 2-to-1, because this risk reward was about a 2.6-to-1, by the time we were at a 2-to-1, I had already taken partials, because I know that we can just reverse. And it was Monday. Like sometimes Mondays, you know, whatever the market gives, like just take it. So let's go forward. Okay, so there you see, like, we're showing a lot of aggression coming down. So I wouldn't necessarily trade if we just sweep this low. If we come below it and we show some kind of a confirmation, then I would consider buy positions, right? So there we are below it. We're technically within this. So now you see there, we've tapped into this POI here. So if you were to take an instant entry, that would have been the zone to look at. And let's see if there's a market structure shift. So look, here is like a very small market structure shift. And you could have, you could have taken it, for example, if we tested back into this. So here's like an opening gap, a small gap that happened. If market pulled back into that gap, then that could have been a good entry. But the thing is, we gapped up and then we tested back into it already. So you would have to be very quick and very alert to catch this, because this entry had technically happened. And this was at so the half-hour mark, right? So this was half an hour into the market open, and there was fundamentals. I think there was ISM something, manufacturing index or something like that. So if you're aware of the fundamental, you would have to be very sharp and alert to catch this type of entry. Let's just see what happens. Okay, so there we do actually test into it. Let's see if it gets respected. And yeah, no, it's not. So we actually go like a tiny smidge below it. Even if you had a stop loss here, might not have even been triggered. Yeah, that would have most likely taken you out. But like I said, yeah, this was the POI from this zone. And you see, that's why I prefer instant entries, because why get stopped out when your POI is still being respected? But yeah, we have a small shift again. Let's see. So market makes a lower low here, and then we shift the market structure here. And then we could have potentially looked for buys if we came into the fair value gap with the stop loss below there and the target. So we'd have to actually target a bit higher to catch a 2-to-1, right? So yeah, look, like that's why for me, I entered here, so I'm not really concerned, because you know, you're trying to catch a little piece of what's left. But we're just more focused on the price action. So there we test into that fair value gap, and then we continue up, right? and we just, like, if you look, we just touch into that opening price gap, and from here I was done trading because I was just like, okay, I don't know what could possibly happen. We could possibly go deeper into here, close this gap more, or we could, reversal could happen at any point really. So just going forward, and yeah, I think this is where price eventually reversed, and then we continued lower. And then just looking here, so we are done looking at what happened at market open, but if we look here, right, the next zone for market to come into a bullish zone is this zone. So you could have waited for price to come into here and then see what happens on the lower time frame, because could have bought from here if there was confluence. And let's just see what happened. Yeah, so there you see we came into this next zone, so it's this below this wick here into this 1 hour fair value, and then I included this hidden base as the POI. Let's just see if we could have seen some kind of a confirmation. So yeah, you would have to really look low time frame to see what type of confirmations there are. This you could have considered to be somewhat of a confirmation. So here we have a W formation. We break this. The final inducement. So the extreme in price could have waited for us to come. So below this low, but above this low into this zone. Could have waited for this and wait for market structure shift in here to take price higher, and there we went above there, and then that was the end of the day. Okay, awesome. So guys, I hope you enjoyed that. I hope you found it educational and insightful. If you guys have any comments or any suggestions, anything, let me know. And yeah, I hope everyone has a good week of trading. Cheers.